Hey guys, it's Sasha Evdokov, and today I want to talk about some daily insights when markets roll over and become bearish. Now, over the last little bit, looking at some of the charts and looking at what's happening in the markets, you'll see that we hit the highs over here twice. So this would be considered our double top. Now, this double top created a rollover effect. And right here you can see the volume acceleration on the Dow and the Dow Jones. And now the markets have been heading lower. And today, again, another down day. So not anything surprising. So if we take a look at the diamonds, which is the ETF from the Dow Jones, again, the same thing, and the volume is increasing. And you can draw a trend channel or a trend line as well to see that the volume is increasing. Now, if you look at the S&P, which is what the professionals typically follow, you'll see that things did break up a little bit beyond this double top, and it's kind of related to the Dow Jones, but not necessarily. It's the 500 leading Fortune 500 companies rather than the Dow 30. So it is a different mix and different indice. In either case, the market rolled over again over here. You can see that it created a top right here at this point. And when it did that, it continued lower and lower on fairly good volume. You can see that on the ETF, the spiders, which is 1/10 of the S&P 500. Okay, so right here, now we're heading lower. Now what happens when markets roll over, if you look at the most popular stocks, things like a Tesla that has been running for a good extended amount of time and has been rocking and rolling for the last months, and you should have made some great, fantastic income and built up your wealth and built up your investment. If you caught this move early, even if you missed it and you caught it right over here, again, you would have been fine. And you caught it over here, you would have been fine. You would have been fine. But now what I want to show you is we've been having a lot of green days, okay? A lot of green days. And if we look at the weekly, you can see the volume spike, a lot of green. But now what's happening is this red spike of volume is picking up. And I always like to reference volume as a thing like voting rights. So if you think about voting rights, you'll know that right now we're getting pretty high voting rights. And the voting rights are surpassing nearly the super highs when it initially broke out. So you can see that if I move it down to previous days, you'll see that they're actually surpassing the last few highs of volume. But right here, we're hitting the levels of 157. So where would the stock pull back? Take a look at the other volumes. So right here is where we were at when we were hitting the high volume peaks at 160. So this stock can go lower right now, and the voting rights are pushing it down. Volume is pushing this stock lower. Now granted, there was some negative news and things like that along with Tesla, but that was a car explosion or just a regular accident and so forth. But the thing is what you understand and what you got to remember is that volume is pushing these stocks lower. And when the stocks roll over, you need to step out of the way. Get out of the way and move. Move your buns out of the way because they're going to keep on going. Take a look at JCPenney, okay? And I just want to share with you some thoughts and insights. Look at this in 2012. It hit the highs over here, and this thing kept on running. Now, people were saying it hit the lows over here, creating a double bottom, but you don't know how far these things will go. You have no idea. And look, the volume again picked up. We got a little fake out over here, and again it picked up, and now it's 841, okay? So just 2 months ago, that stock was over at $15, and now it's 50% less, and it's still pushing down. This thing can go to 4 until it's undersold. Who knows? You don't know. I don't know. But you trade the volume, the action, and the behavior. And if you look at the weekly, you'll notice that the weekly on the JCPenney continues to roll. It continues to roll. So what do? You step out of the way. Don't be like a regular individual investor. And, even if you got in right here on this 2012, 113, 2012, and you bought it looking for an upside at $36 a share, it might have ran to 43. And if you didn't sell it then, you should have been out right by the $33 mark because that would have hit your stop. But it continued. And if you're still holding it at $13 a share, but you bought it at 36, 37, then that's just plain silly. Don't do that. Anyway, the volume is pushing lower. Things are rolling over in the market at the moment, and you need to step aside. You need to watch the action, the price, and the behavior, and the volume, and where it's taking it. Where will it take it? Nobody knows. All you can do is manage risk. You can manage your risk. You can manage what's happening in the market. And that's why option spreads are pretty good if you understand options and you know how to trade them on the spreads for the income every month trades. If you're doing speculative trades, you need to behavior. You need to be careful because you need to watch out what's happening with each individual stock. Take a look at even Facebook over here. It's been doing a lot of stair-step patterns and stair-step motions. If I look at the hourly, you can see it's been moving up, but now it's going to move lower and lower, and it's moving lower right now, and it may come and fill this gap region right here. So that's what's happening in the market right now. That's what's going on, and you need to just be careful and see what happens. You need to trade them accordingly. You need to stick to your stops, and you need to watch your risk. The market's a game of inventory. If you have things that are not working well for you, if you have things in your inventory that are doing bad, like vegetables going bad, then you need to get rid of them. You need to either A, sell them, or B, throw them out. So in this case, you would have to get rid of them by selling them. In either case, sometimes you might need to protect them. In that case, you would get some insurance. But right now, the key point to understand is when markets roll over, when you're watching things like the Dow and they're doing a 136-point decline, you'll learn to love these types of moves because they create new chart patterns, they create new opportunities, and allows you to get in later. Just don't be the one to ride them down. It's that simple. And as an individual investor, you have the luxury to getting in and out fairly quickly because you're not trying to sell $2 million worth of stock in any one given time. In either case, I'm Sasha Evdokov. Thanks for watching, and if you want to check out the scoop, check out my website, TRADERSFLY.com, where I have some other great products, information, and courses on how to trade and invest properly. Thanks again.